Something is happening with Cardano, something big. Beneath the surface, away from the daily noise and the price charts everyone is watching, a seismic shift is underway. The derivatives market for ADA, it just exploded. We're talking about a level of leverage bets not seen since the last great bull run. And this isn't just some random fluke. On-chain data reveals a dark, intriguing truth. As retail investors panic and sell off their bags, the biggest players in the game, the so-called crypto whales, are accumulating. They're silently stacking, preparing for something. The question is, are they preparing to dump on you, or are they fueling the next leg of a massive parabolic price rally? What's up, everyone? Welcome back to the channel. Let's talk about Cardano. For weeks, maybe even months, ADA has been a total snooze fest. It's been stuck in this agonizing sideways consolidation, a boring range that's driving everyone insane. The price action has been an absolute grind, struggling to break above the psychological 90-cent resistance level, and frankly, a lot of traders have lost interest. But for those of us who have been in this game for years, who understand market cycles and the rhythm of the blockchain, this quiet period is not a sign of weakness. It's the most critical phase of all. It's the silence before the scream. It's the low-hanging fruit nobody wants to pick. Because right now, while everyone is looking away, some of the most critical on-chain metrics and derivatives data are screaming a completely different story. They're painting a picture of a cryptocurrency on the verge of a massive, explosive move. So, let's dive into the data. What's actually happening behind the scenes? On-chain analytics from top-tier platforms like Santiment are showing a fascinating narrative playing out. The largest wallet investors, the so-called crypto whales, those holding over 10 million ADA, have been in a relentless accumulation phase. Since the start of the month, they've added over 16 million new ADA tokens to their portfolios. This isn't a small amount. This is a significant intentional capital allocation by sophisticated players who typically have better information and a longer-term horizon than the average retail trader. They're not just hoping the price goes up, they are positioning themselves for it. But here's where the plot thickens. As the whales are accumulating, something else is happening. Medium-scale investors, the wallets holding between 10,000 and 10 million ADA, are doing the exact opposite. They've been offloading their bags. Over the same period, they've reduced their holdings by over 11 million ADA. But that's not even the most explosive data point. Let's pivot to the derivatives market. Cardano Futures Open Interest, which is simply the total number of unsettled, leveraged futures contracts, just hit a staggering $2.5 billion. This is a monumental signal. When open interest surges, it means new capital is flowing into the market. It means traders are placing enormous leveraged bets on Cardano's price movement. This isn't a small-time phenomenon. This is institutional-level speculation, a massive vote of confidence or a massive gamble. A rise in open interest can act like rocket fuel, but it also carries a terrifying level of risk. With so much leverage on the table, any sudden price swing, up or down, could trigger a cascading series of liquidations, amplifying the move to the upside or leading to a devastating flash crash. So, what does the chart tell us about where this is headed? Looking at the 4-hour chart, ADA has finally broken out of a textbook falling wedge pattern. And the bullish signals don't stop there. We just saw a golden cross pattern form on the 4-hour chart. For those of you who are new to this, a golden cross is one of the most powerful bullish indicators in technical analysis. But before you go all in, let's inject a healthy dose of caution. Now let's talk about the macro narrative. Analysts at Bitcoin Census made a fascinating observation. They noticed that Cardano's current market structure looks eerily similar to what we saw back in 2024. Back then, ADA hit a low of around 51 cents in June before igniting a massive 360% rally that took it to $1.33 by December. And guess what? This year, ADA once again tested that same 51-cent low in June. The pattern is repeating. If history is any guide, a similar push could be on the horizon. But there's one more, potentially game-changing catalyst we need to discuss. The Cardano ETF. The market sentiment for a spot Cardano ETF is heating up. Just a few days ago, Polymarket showed the approval odds at a whopping 87%. This, along with recent filings from major financial players like Grayscale, could pave the way for a massive influx of institutional capital. A regulated ETF would open the floodgates for traditional finance, bringing billions of dollars in new investment directly into the ADA ecosystem. The picture is becoming crystal clear. We have a trifecta of bullish signals, aggressive whale accumulation, a record-breaking surge in futures open interest, and a technical chart that shows a classic breakout pattern. While the short-term indicators suggest some volatility and a potential pullback is possible, the long-term cyclical data and the looming ETF narrative are pointing to one thing: a potential bull run for Cardano, unlike anything we've seen in a very long time. This isn't just about a price target, this is about a fundamental shift in market dynamics. The big players are positioned, the charts are aligned, and the catalysts are in play. Stay vigilant, do your own research, and remember, in this game, patience is often the most profitable strategy of all. This video is for entertainment and informational purposes only. The opinions expressed are based on my personal analysis and are not financial advice. Cryptocurrency is a highly volatile and speculative asset class. The information provided should not be considered as a recommendation to buy, sell, or hold any cryptocurrency. You should always conduct your own research and consult with a qualified financial advisor before making any investment decisions. I am not a financial advisor.